Nasdaq futures are down almost 5% before the markets opened. And it's not just another Monday. It's looking like the worst Monday, the worst day in the Nasdaq trading since COVID, since 2020. Let's talk about why. You're going to be hearing a lot about the yen carry trade over the next couple of days. And I'm going to break it down as to what it is and why it's affecting the market in the way that it is. Let's start out. First up, you need to know how it works. The yen carry trade, in brief, is a way for US investors, particularly hedge funds, to borrow at a really low interest rate, bring that money back over here, invest it, and leverage their funds. It's that simple. So in Japan, interest rates have been 0% for the last 20 years. And hedge funds were able to borrow in yen. They would convert those yen into dollars. They would then take those dollars, invest them into the stock market. So when you look at bets on Nvidia, Intel, a lot of the big corporations, a lot of the big tech names particularly, that was driven in part by the yen carry trade. So when the Bank of Japan raised their overnight rate from 0% to 0.25% last night, that is causing so many hedge funds to begin unwinding their positions. They're worried about getting margin called. Maybe they are getting margin called. Either way, they are selling assets so they can repay those loans. And you're seeing that in a couple different places. One, obviously you're seeing that in the Nasdaq. Like I said, the Nasdaq's down 4.8% as of right now. I'm recording this at 9:21 on Monday morning. And you're also seeing that in the conversion between the Japanese yen and the dollar. So when all those hedge fund dollars are trying to buy up yen, it's bidding up the price of yen, which makes it even more painful. And so you're seeing the price of yen versus the dollar is up around 2%. I'm looking over to the side so I can see Bloomberg right now. And that's a huge move. Typically when you're looking at currencies, they might move 0.1%, they might move 0.5%. They very rarely move multiple percent in a day. That's a big deal. And you'll probably see this for the next few days because this is such a large trade. It has so much money behind it. It's not going to be able to be unwound, to be sold off and closed out in a single day. So combine what's going on there with all the geopolitical risks that we're seeing, we're in for a bumpy week. Keep your eyes on the prize.